Hey guys, it's Lawrence here. In my last video, we talked about Planet Fitness and the price movements that have been happening recently and where I saw it going in the next couple weeks. But I shared this video with a few of my close friends, some people I know from school and just around, and the thing they told me, or most of them said, is that they didn't understand a thing about the stock market. So that gave me the idea of making this video where I go in and just explain the very simplest, most basic principles of the stock market. I want to give some insight into what I learned at the beginning, what I wish I knew at the beginning. That took me a little while to find out, um, and a little advice that I would give if I was going to give advice to myself when I started. That it's stuff I just wish I knew when I started. There was so much that was unanswered at that time that I know now, and I'm sure I'm going to learn a lot more as I go forward. But right now, this is where I'm at, and this is what I wish I would have known uh, when I had started. So we're looking at Robinhood. We looked at Robinhood in the last thing, my last video. Um, so this is what it's basically going to look like. Let's look at Planet Fitness. Planet Fitness, just like we looked at on the last video. We did look at this, which is a little bit more complex and complicated. Um, Now, this is only on the web platform, but if you're using Robinhood, most of the time you're going to be on your mobile app. It's really simple to be on the phone. It's great. It's really simple and it's great to be using on the go wherever you're at on the phone. It's really nice. It's really well laid out for simplicity. But this is the web, and you're probably not going to see this unless you are a little bit more into it. This is what you're going to see. This is the day 1 day price movement, the last day. This was Friday. It's Sunday night. So the first thing you should probably know about the stock market, if you know nothing, it's open Monday through Friday. Um, some brokerages have better hours than others. Robinhood is 9 to 6. I believe most of them are 9:30 to 4. Um, I've always been on Robinhood or TD Ameritrade. I don't even know what TD Ameritrade is. It's a little bit more than Robinhood. So here we are, 9 o'clock. The price is $76 and let me get it right there. $76.58. So what this means is this is the price to buy one share of Planet Fitness, and there are a whole bunch of shares of Planet Fitness, but for one share, it's $76.58. Basically, what this price means, this is the value we see in the company. Um, so if you want to buy one share, you're going to pay $76.58. And at the end of the day, we can see that the price slowly went down. This line represents the value of the price. And as I follow it down, we can see it's going horizontal here. It's around the same. And it starts going down throughout the middle of the day. And here we are at the lowest point, $74.17. That was 4 o'clock. That's when the markets close. That's why it's more straight lines here. This is just Robinhood. And at 6 o'clock when Robinhood closed, it was still at $74.17. So if I was to buy one share of Planet Fitness in the morning, 9:10, I wake up, I'm like, let's buy one share of Planet Fitness. I would pay $76.58, and I would now own one share of Planet Fitness. So with my $76.58 investment, the day goes on, the day goes on. I nervously look at my phone throughout the whole day. I see the price going down. I'm getting scared. And then it goes to down here. So now my $76.58 I had at the beginning of the day is now worth $74.17. So I had lost $2.41 in that day. That's with one share. If I was to buy 100 shares, which would be $7,600, I would have to pay. I would lose $241, which is just times 100 what you would lose one share. But at the same time, you got to think, what if this would have gone up 200 or $2.41. I would have made $241 off of that $7,600 investment, which is pretty good for sitting down doing nothing, just clicking a few buttons at the beginning of the day and at the end of the day. So let's look at the week. Let's look at the month. Trying to find one. Let's look at the year. I know the year is good. Here we are. So $25, this little thing right here, plus $25. That means in the past year, this value has gone up $25. So it was around $49 to $50 range 1 year ago. Let's go look. By putting my mouse right here, I can see the price it was on July 20th, exactly a year ago, 2018. It says it right there. It's $49.87. So a year ago, I say, wow, Planet Fitness is a great buy. I'm gonna buy 100 shares of Planet Fitness, and that would be $4,900. So around $5,000 I'm putting in to Planet Fitness with my faith of Planet Fitness and hoping that it will grow. A year later, we look back at the app, we see that Planet Fitness is now worth $74. So I sell 100 shares for $74 each. I just sold $7,400 worth of shares. I invested $5,000. I made $2,400 off of doing nothing. All I did was type in 100 right here, press enter, buy it a year ago. Today, it's gained me 2,400 bucks. At the same time, you have to think about it like this. If some bad news, if Planet Fitness made some mistakes, if something came out where it looked bad for Planet Fitness's future, and this went down $25, you would be, instead of gaining that 2,500 bucks, you would this price would now be worth $25 per share, and you would have lost $2,500. So there's pros and cons, can't just always make money, but if you're smart and you pay attention to the markets and you use a little bit of sense, sometimes you can make some money, and it's a great feeling when you do. That's just basically very simple how it works. There's a lot more to it if you do different kinds of trading, like options trading. But for very beginners, do not do options trading. That's what I'm going to start off saying. Give it a little bit of time of this, and then I'd suggest starting into options trading. So a few things I wish I knew when I first started. You only get 3 day trades. You only get 3 day trades per week. So what this means is if you buy a stock Monday morning and then you sell that same stock Monday night, that's a day trade. So if I would have bought, let's go to the day chart. I buy Planet Fitness at $76.58. I buy 1 share or however many shares, but let's just say I bought 1 share this time. And then I'm looking at my phone all day, and then I see it's going down. I'm getting scared. And for some random reason, I decide to sell at $74.17 at the end of the day. That is a day trade, and I have taken up a day trade. Now, something else I'd like to address real quick. Why on earth would you sell after it's gone down $2 throughout the day if no news had come out and that nothing has changed? Why would you pay for something at $76 and then sell it at $74 the same day? That makes no sense. People do this all the time. It's weird. It doesn't make any sense. Why did you buy it in the first place if you're just going to sell it a day later when it's gone down $2? It can't always just go immediately what you think is going to happen. You got to give it some time. However, if some news does come out and it's bad news or something has changed in the market, this would be a smart thing to do, sell, as we could expect that it would keep going down. Now, Planet Fitness didn't have anything come out, so a lot of times if news does come out, it's a bigger jump. And if it is a big jump, that would make sense to sometimes sell. If you don't see it going back up, you see it keep going down. So back to the day trading. I buy it in the morning, I sell it at night. You get 3 of those per week. And let's go over here to this account. I'll show you exactly how it works on Robinhood. They give you these 3 circles. I know my face is in the way a little bit. Let's not worry about that. It says day trades. It says I have 0. These are open circles. That means I haven't used any day trades this week. I haven't day traded in Robinhood in a little while. Um, so what would happen? I do that day trade with Planet Fitness that we were just talking about, and then it would show up right here. It'd be Planet Fitness 1. And then let's say the next day I go and day trade Google. So I buy it in the morning, sell at night, and I'll have 2 day trades. Let's say this was Tuesday and this was Wednesday. So I'd get this day trade back the following Tuesday. That's how that worked. And then I'd get the Google day trade back the following Wednesday. Now see how there's a lock on this one? You only get 3, like I said, and you can't day trade a 4th time. So if I use all 3 day trades and then I purchase something in the morning on Friday after the 3 day trades are already gone, um, or any day that you have 3 day trades already gone, um, and then some bad news comes out and it starts going straight down, you're kind of in trouble because you can't sell. You better hope that something else comes out to push it back up because you would have lost a lot of money. This has happened to me and Barrett a couple times. I wouldn't say a couple, I'd say both of us, it happened to us once, and we learned from it and we decided we wouldn't use all 3 of our day trades unless we absolutely had to. The third one should be a safety net. The first 2 you just use to make money sometimes, like you have a good day and you're not confident it's going to go up again the next day and you just want to get out with your profits. That's a good way to use your first 2. That's kind of my rule. But your third one should always be a safety net. So don't waste your third one unless you're just huge profit. And then you might want to take a couple days until you get that next day trade back just in case. Of course, that's not as big a deal if you're going to hold something for a long, long time. Um, Even if you see yourself guaranteeing yourself you're going to hold it for more than a week, you can go ahead and buy it and not worry about the day trade thing. If you do go over, they're going to lock you out of day trading for 90 days. I think you can still trade, but you just can't day trade. I have never had this happen to me, so I wouldn't know. I've never gone over. Let's go back. Let's go back to Planet Fitness now. Okay, so day trading's up. When you're first putting in money, this is how much I would say to put in. As much as you're comfortable losing every single cent that you put in. If you're comfortable losing all of that, then that's how much you should put in. For me, that was $200. I said it's worth $200 to learn about the stock market, even if I lose every bit of that. I ended up gaining, when I first started, I put in $200 and I made it to 240 in the next couple of months, which is 20% gain. And I started putting in more money before I actually. So I tested it out a little bit before I actually put in more money after the 200 because the more money you have in, the more money you can make, but at the same time, it's the more money you can lose. So start small, and it's going to be a little scary, but don't put in too much where it's too much to lose. Okay. Um. So after how much to put in, I want to tell you this. So it's going to be nerve-wracking at first buying your first couple of stocks, but if you're paying with only $200, don't be too worried about it. If you lose 20 bucks here and there, it's going to be fine. All I do now is options trading, which I think I referenced earlier in the video, but we'll talk about that later. It's a lot more complicated. And for the longest time, I was only trading the way I just showed you. But I wanted to get into options and I couldn't find a YouTube video that explained it very well. I didn't understand it. And I said, forget it. I'm just going to buy an option and I'm going to see what happens. So I kind of taught myself how it works. Um, I just bought a really cheap one. I said if I lose money, oh well. I made $4 off that first option, which is nothing. $4 is nothing right now. And I was happy with the $4 though because I just buying it and selling it made sense to me. I saw what was happening. I looked at it and I could understand what it meant that I had. And before I bought it, I had no clue what it meant, what I had. So that's kind of just comparing to what it's going to be like when you first start trading. You just got to buy something. You got to see what's happening, look at the whole app, look at the numbers, see what's changing, try to figure it out. You'll figure it out. It's really simple. It's just a little confusing at first. Um, this is different than the mobile app. There's some cool things right here. Average price paid on Robinhood, um, $61. So it's way above that right now. It says it's 20% above that. That's cool. It has an 85% buy rating. That means out of 13 ratings, 85% of the people have said buy. It's a buy. A hold would mean just don't sell or buy, and a sell would be they think it's going to go down. So nobody thinks it's going to go down out of the analysis, or not too much where it's worth selling. And a lot of people say it's a buy. Here, this is the earnings. This is a big deal. If you don't know what you're doing, and earnings, so if the app comes out and says earnings are coming out this week, um, I know Tesla's earnings are coming out this week. I think Facebook's earnings are coming out this week. If you don't know what you're doing and their earnings are coming out this week, do not invest in that company. And if you're in the company and you want to stay in the company during earnings, um, definitely look up what earnings are and how it's going to affect the stock. Basically, there's an expected value of how much they're going to make per share. That's just how much the company's going to make per share. And if it's above or below that, it's going to greatly affect the stock. So it's just something to pay attention to. When you're setting up your Robinhood account, I would suggest starting in Robinhood. I found it great for me when I started out. It's really simple, it's easy to use, it's very user friendly. Definitely start in Robinhood, I would say. Um, find someone who already has Robinhood that knows a little bit what they're doing, and there's a I guess it's a promotion where you get a free stock for signing someone up to Robinhood, and both of y'all get a free stock. It's free money. You sell the stock for whatever it is, or you hold the stock. It goes into your account, so it's free money. Um, definitely make sure you do that while you're signing up. It'll make you and the other person happy. And that's about it. If you have any more questions about startups or starting up, um, put it in the comments. I'll be happy to answer anybody's questions. And this is just a few of the things I wish I would have known when I first started. See you next time.